Welcome back for another top-notch video. This week, guys, we're talking about the 26th of October through the 30th of October. As always, our top-notch channel talks about the Thrift Savings Plan, or we talk about the TSP, the CSI and F fund, or if you're in Roth IRA brokerage accounts, we talk about IVV, VXF, EFA, and AGG. These funds equal each other for each one of these funds, and what they represent is the S&P 500, small caps, international markets, and bonds. We typically do a kind of a general overview, and then we do a technical analysis. The first thing we want to look at is how is the Top Notch channel doing compared to these funds. As you can see, for the year, the funds, the best fund we have performing for the year is the F fund, or bonds, AGG, up at 6.3%. How is Top Notch performing versus these other funds for the year? As you can see, we are outperforming all funds for the year. We are above all funds. We're sitting at 6.4% for the year. That is beating all markets for the entire year. Doing very, very well on this channel. Very, very well. We're very happy with the returns that we got. Let's go ahead and dig right into this week. So for this week, guys, it was a bloodbath. It was one of the worst weeks we saw since March timeframe. Stocks, our equity funds were down 5 to 6% in our CS and I funds, and bonds were down just a little bit for the week, but that is really terrible compared to what the gains we made for this month. So it is really, really bad. We were able to stay out of stock funds for a while. We entered probably during one of the worst weeks ever, but we are still above all of our stock funds, beating all markets. Very impressed still with where we're at for the year. We still got 2 months in this year before it ends, so we're very happy for where we sit at for this year, beating out all these other funds. If you need to see it on a chart representation, here was the funds for the week. As you can see, funds really never had a chance. They started off on the 26th, 1 to 2%. Then as the week went on, they got all the way down to almost past negative 5% for the week. So it was a really rough week for our equity funds. The only thing that was able to really stay buoyant here, as you can see, is the F fund, or bonds, AGG. That was the only fund that kind of stayed right where it was, just a slight below the 0% line moving forward. Kind of a general overview, guys, for the S&P 500. As you can see here, our S&P 500 is in a very downward track here. Look at this massive gap here we had after we moved through these moving average. After the 50-day moving average really moved down here, we were able to close this gap that we saw back here in early September, so that was a good thing. But we might see a double bottom here. That's a possibility. We now have these two lines overhead, these trend lines, to act as resistance. And with an election coming up, guys, we just don't know where things are headed. We will get a better idea on our technical analysis. That being said, let's go ahead and move into some of our other charts. So the other charts we want to look at is the things we're going to start is a technical analysis of the C fund, or IVV, the S&P 500. Where do we sit? Where do we stand on this fund? As you can see here, guys, we have these long trend lines that are drawn in here. We were able to break that trend line just this week. That is not a good sign. Very bad sign on a technical analysis. We are below our moving averages here, moving towards the 200-day moving average. That is not a positive sign for this fund moving forward. If we got to this 200-day moving average, we'd lose a couple months worth of gains, guys. So that's very interesting to see. Please keep that in mind as we're rolling forward. If we look at our charts, the thing that we like to look at in our charts is some technical analysis. Now, this is IVV on the chart, so the S&P 500, basically the C fund. As you can see here, we like to look at long-term charts, which is the weekly chart, project way far out, and short-term charts, which is more what's going to happen in the immediate future. The indicators we use to look at these is the PPO line, which is the blue, and the red line. Usually when the blue line is above the red line, price, which is up here, tends to increase. When the blue line dips below the red line, price tends to decrease. That's one of our indicators we use to kind of look and double check our price. The other indicator we like to look at to see if prices are going to go up and down in the stock market is the derivative oscillator. That is these red bars and green bars. Usually when the red bars move to green bars and they're going up, price tends to go up. When the green bars tend to go down into the red bars or go negative, we tend to see price decrease. So those are the two indicators we use. We like to keep it simple on here. The only other thing we like to look at is the derivative, or the Bollinger Bands, which is this bluish bubble behind price here. Usually when the price is within the Bollinger Bands, price tends to stay within that. So we just like to look at that. But those are our like 3 main indicators. We keep it very simple for you guys on the Top Notch channel. Please pay attention closely as we'll go through these indicators for every single one of our charts. Starting off with the S&P 500 or the CFund weekly chart, long-term chart. What did we see, guys? We saw the chart start to come out on the derivative oscillator here. Negative was moving up from negative 1.4 to negative 0.83 to negative 0.3, and then we saw a big decrease this week to a negative 1.43 again. That is not a positive sign in the right direction. That is negative. Price reacted negatively. We got in right around here thinking that price was going to get above here and do good things moving forward, and that was not the case. Very rare time where we get in usually and we don't see results from that happening. Our results turn negative, but that's why we trade the chart in front of us, guys, because things can always change in the market. With an election coming up, that is not a good sign at all. We could see things quite decrease quite dramatically in the upcoming weeks and months. So just keep that in mind on a long-term chart. Negative derivative oscillator, negative PPO line. 2 of our bars down, price moving down. Not a good thing for IVV or the CFund. Let's see it on a short-term basis. What do we have? As you can see on a short-term basis, not good things. Our PPO line has been negative since the 15th of October. It's been moving in a negative direction. Negative. We thought right around here it was going to get out of the negative. We bought in right around here, and that was not a good time to buy for the Top Notch channel. We ended up losing quite a significant amount since then, but it's important that we mitigate damages here on out and move forward. The biggest thing with trading stocks is not being wrong, but staying wrong. You do not want to stay wrong in the stock market, or you will continue to see your portfolio lose quite a significant amount of value. So we made some moves this week. I'll show those at the end of the video, but this is not headed in the right direction. PPO line's still really red here. The derivative oscillator looks like it's moving out here, but we need to see some positives. We need to see 2 positive signs on this chart since our weekly chart is down as well. And without that, we really can't buy into this fund. There is really no buy point at this time for the CFund. Let's move on to VXF. VXF ETF or the S Fund for Thrift Savings Plan. This is small caps. Where do we sit? Where do we stand? As you can see with small caps here, we are also doing very bad. We had this trend line drawn in here from all the way back in April. We just crossed that. We just crossed over our moving averages and a trend line. Nothing keeping this from the bottom of the 200-day moving average down here. That's a long ways away. We do not want to be a part of that. If that is the case, we'll have to wait and see. We'll have to see what I think the election will kind of drive things and see where things go. Let's look at it on a technical analysis. Technical analysis-wise, we look at the exact same indicators that we did with IVV. If you need to go back and look at those, please do. We're looking at that derivative oscillator and the PPO line. What do we see here? We saw this chart get out right around the 9th or the 10th. We saw it turn positive. We thought that would be a good time to buy, and it ended up not being. We saw a big decrease in our derivative oscillator this week. PPO line moving back down on the long-term weekly charts. Not a positive place to buy. Not a positive place to get in. I would stay out of VXF for the time being. On a short-term basis for VXF, what are we seeing here? Saw a fake out here. Saw some good things happening here around the 23rd. Thought it'd be a good time to get in, and it was not. We saw a fake out here with our derivative oscillator where it went back negative. Usually we see a pretty big, drastic price drop when we see a fake out, and sure enough, that's exactly what we got with price. As you can see, move way down here. Typically, when the Bollinger Bands get real close together, we start to see a big move in price. We saw that to the downward. We thought that we'd see that from the upward, being right around this time frame here, and we were wrong. The PPO line is still in the negative, and our derivative oscillator is also negative. It's moving out a little bit, but we need to see positive signs here moving forward until we see a buy point. We really do not see that right now. Seeing this derivative oscillator in the long-term chart go from a 1.7 all the way to a 7.8, 0.78, that is a big decrease for VXF. Want to stay out of that. Want to keep our gains for the year alive. Moving on to EFA. What do we see with EFA? EFA is also dropping. Look at this, guys. We saw this trend line all the way from April, really kind of dancing around these trend lines for a long time. Price was not moving anywhere for, I would say, a good 2, almost 3 months. Well, we finally got our decision. We finally got where price is going to go in the future, and it went down, guys. It hit that 200-day average. That's where other price, our equity funds, could be headed in the future. Please keep that in mind. With EFA, we don't know if this will hold or not. We'll have to wait and see. That is not a good place for it to be in. Not a good place to buy. Let's look at it from a technical analysis for EFA long-term weekly charts. Look at this with it bouncing and being so delicate around that 200-day moving average. And we saw huge negative price action here. Derivative oscillator is negative. PPO line is below that red line there. Negative and negative. Price reacting negatively. Bollinger Bands very close here. Not a place you want to be in. Very dangerous for EFA. Would not stick around EFA right this time. I would not do it, guys. On a short-term basis, we're seeing a little bit of recovery. We did see a weekly basically fake out. Got very close here to getting out of that weekly fake out, and then sure enough, Bollinger Bands very close together. Big price movement down. Now this did come out of the Bollinger Bands. As we could see, it got right back into the Bollinger Bands within a day or two, which is good, but still very in the negative on our PPO line. And we are doing a little bit better on the derivative oscillator, but we need to see this head back to positive before we see any time to buy into this fund. So all three of our equity funds, guys, not very good buys at this time. AGG, moving forward with bonds, safe place to be. Where do we see bonds going? Guys, we saw it kind of dribble-drabbling all around the August and September timeframe in this area. Then we start to see it drop, and this is not good. We're seeing lower highs here and lower lows here. We're getting very close to that 200-day moving average. We want to see it bump off of that. But our 50-day and our 20-day moving averages are also getting very close here. If we were to drop here, we do not know where that could go. So we want to be very cautious with AGG as well. Let's look at it from a price perspective. Long-term charts, where do we sit? AGG, ooh, look at this, guys. Close Bollinger Bands here. Negative sign with the PPO line below that red moving average line. Not good. And look at this. Saw a negative fake out with our basically long-term charts, derivative oscillator. This negative line is moving back up. We're seeing these bars get bigger now. Price is reacting negatively. Not a place to have funds right now. I would stay away from AGG on a long-term basis. And basically in our 4-hour chart, also very negative. Look how drastic that is right there. Some real negative price movement this last week for AGG. PPO line cross negative. Derivative oscillators negative. No buy-in points at this time with any of our funds. What a crazy week right before the election. We'll have to wait and see where things go after the election. My prediction, though, with these charts is we're not headed in a positive direction with our stocks. You might want to be cautious where you have things right now. Maybe try to be a little bit more defensive, put things in a little more defensive assets. We'll hunker down a little bit through this election and hopefully pick up on that Christmas rally through December. Hopefully catch some funds there. As far as the top-notch channel goes, where do we sit? Where do we stand? As you can see here, guys, we are 100% in the G fund or cash. That's where we have our capital right now. We have a 6% gain for the year, and we are beating out all markets for the year. We're very excited about that we're ahead of markets, and we just don't want to lose our gains that we've worked so hard for on this year, and we don't want to just throw it all on the whim of the election. With the technical analysis pointing downward, we're gonna respect that and enjoy our gains for what we have them for. We'll have to wait and see where we are about mid-November or towards the December timeframe, and maybe pick up again around that point. If you guys have questions, concerns, or comments, please write those in the comments below. As always, we really appreciate you guys being here on the Top Notch channel. That's another Top Notch video. We'll see you guys next time.